What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we see high volatility as we now have a confirmed double top in SPY. Are we about to see the stock market go for another leg lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.33% and we can now see that SPY has a confirmed double top because on Friday we broke down through the neckline. So remember, we've been following these consolidation patterns across the indices, and on SPY we did reach that double top price target at 457, failed to break above that level, and now that we've gotten rejected from resistance and broke down through the neckline around 445, we now do have a confirmed double top, which means we might see SPY coming all the way back down to about 433 before we find support. You could see with today's price action we started to sell off towards that target, but we did get buyers of the dip and close near the high of the day, even though we did have a very high volatile day and we now have the VIX trading above 28. So with a confirmed price target lower at 433 and a confirmed downtrend, which you can clearly see all the moving averages are negatively sloping, you will want to be very cautious in this market because there is a lot of downward momentum. The longer the market stays weak like this and the weaker the market gets, the downside momentum can start to pick up and we could start to see more massive selling just like we saw back here around January. So don't rule out the possibility that if we start slicing through support levels below, we could see another high volume wave of selling. Now in order for that to happen, we'll need to see SPY breaking down through two key support levels, and those levels will be 433 and 428. Remember, as long as SPY is below 445, you do want to be expecting more downside, so the next bullish breakout on SPY will be all the way back above 450. If SPY is below 450, be very cautious because we're more than likely going to start seeing more downside. But once we start to see SPY breaking out back above 450, that will be your first sign of bullish price action, with the confirmation still being the close back above 457, which as you can tell from the chart, we have still not had that bullish confirmation. So it's a downtrend until it's not, so you shouldn't be getting overly bullish during a downtrend, and if you're trading, make sure you have great risk management at these levels. Now if at any point we lose that support level at 428, it means we're coming all the way back down to retest this low around 420, and if we lose that support level, we could see the stock market going into a bear market this year. For the time being, this is still pullback and correction territory in SPY, because from the previous all-time high, we're still only down about 8.5%, and from the high all the way down to the intraday low, we were down just over 12%. So this is not a bear market, this is still in the realm of a stock market correction, but if we lose that support level at 420, we could go into a full-blown bear market, so you will want to be very cognizant of that level. So respect that we do have this confirmed double top with this price target at 433 and that we are still in a downtrend until we're not. So wait for the confirmation of the bullish price action before you start getting overly bullish on this market. On the NASDAQ 100 triple Qs, you could see that we did break out of our consolidation wedge on Friday and we did break to the downside. We broke down through that support level at 352, and you can clearly see from the moving averages we have a lot of downward momentum. So just like on SPY, you want to be very cautious of more downside in the triple Qs. We have this support level down here at 340, and the previous low below that is at 334. And if we lose that support level at 334, we more than likely will see the triple Qs going into a bear market. So there's two very critical support levels below, and they're only about 3 to 4% away before we test those levels as support. And if we start closing below those support levels, the market as a whole will become a lot weaker and we could see a lot more downside, which means you should be expecting to see the stock market go for another leg lower if we see the triple Qs going below 334. That next leg lower is in the 320s and we'll cross that bridge when the time comes. But for now, watch those levels at 340 and 334. Now to the upside, you need to see the triple Qs getting back above about 352 to 353. And the confirmation that we're getting right back on the bull won't be until we get back above 367 and then back above 370. As you can tell from the chart, those targets are far ways away. So be a lot more cautious until we can see the triple Qs breaking out of this downtrend. Remember that anything in between these critical levels will be a volatile whipsaw with bull traps and bear traps alike. So if you're not interested in trading a choppy market, wait for the confirmation of the breakout. Remember that we're already in the confirmation for more downside because that was on the breakdown below 352. So you should be expecting to see more downside until we can at least see the triple Qs breaking back above 352. If you're expecting upside when we have confirmation of more downside, you're playing a risky game, and if you're doing that, make sure you're going long and you don't mind holding for the long term if you end up buying too soon. In the Dow Jones, we were down 0.4% today, and you can also see the Dow Jones did lose a very critical support level with the price action closing down below 347. So you can see this across the board that the indices are losing some critical support levels, and we clearly have downward momentum in the Dow Jones as well, with all these moving averages sloping to the downside, and they're all starting to cross over to the bearish trend. So the next support level on the Dow Jones is down here right around 344 to 345. And if we lose that level, we're coming back down to 340 and 338. And if we start closing below these support levels, we will have a confirmed double top in the Dow Jones on the weekly chart. Now, the only thing bullish for the Dow Jones is that we still do have a gap up here at 360, and we know that gap is very likely going to get filled. The question is, are we going to fill that gap now, or will we see the Dow Jones go for another leg lower and then fill that gap at a later date? Remember, we don't know when the gaps will get filled. We just know that the gap will get filled. So don't be looking at that gap too much now that we're in a confirmed downtrend, because we won't know that gap's likely getting filled until we see the Dow Jones breaking back above about 351 and then closing back above the 50 EMA, which is right around 353. So your bullish breakouts in the Dow Jones will be back above 351 and then back above 353. And your bearish breakdown in the Dow Jones will be below 344 and then back down below 340 and 338. Below 338, we're retesting the low right around 331.5. In the Russell 2000, we were down 0.35% today, and we see the Russell 2000 is still closing above the 20 simple moving average, even though it is negatively sloping. So far on the Russell 2000, we still have a higher high and a higher low, so as long as the Russell 2000 can stay above 197, there's still the possibility to get a breakout and retest that 50 EMA, which is right around 209. If we lose support at 197, you're looking for support at 191, and below 191, we're very likely heading to 170 with support on the way there at 183. Now, if we can get a bullish breakout back above 212, that will be extremely bullish, getting back above that resistance level, and then we'll need to see the next bullish breakout back above about 215. That will allow you to get a lot more bullish on the Russell 2000, but while it's trading below 212 and trading below the 50 EMA, you need to be very cautious of more downside. On the Arkk ETF, we were down 0.71% today, and we can still see the price action is below all the moving averages, and we're starting to look like we're going in through this consolidation. There's a very clear trading range here stuck between 69 and about 77, so we will see a bullish breakout back above 77 or a bearish breakdown back down below 69. Below 69, look for a retest of 64, and if that level as support fails, you're looking for the next support level at 60. On a break above 77, it'll be looking a lot more bullish. And then the next bullish breakout for Arkk will be back above that 50 EMA, which will require a close back above $84. On the VIX, we were up 3.58% with the VIX closing back above 28. So you can clearly see where the high volatility is coming from. Fear is coming right back into this market, and one more day of the VIX above 25 and we'll have a bullish trend in the VIX. So anytime the VIX is spiking, you need to be very cautious because something is causing a lot of fear in the market. And that is confirmed with the downtrend and the bearish price action breaking through support. So we really need to see the VIX starting to cool down to get bullish, which means we need to see the VIX getting back down below 23 and closing back down below 20. As long as the VIX is trading at this elevated range and trading above 25, you need to be very cautious because it is likely the VIX is spiking as we're getting ready to make another leg lower in the stock market. So watch the VIX closely and respect the fact that the VIX is trading at elevated levels. On Bitcoin, we're currently up 1.43% today, and we see Bitcoin did break back down below the 50 EMA. So we see Bitcoin failing to hold that level as support, but we are still trading above a positively sloping 20 simple moving average. So we still have a support level on Bitcoin right around $41,000. If we lose 41,000, we're coming back down to 38,000, and below 38,000, you're looking for support at 35,000 and 31,000. The next bullish breakout on Bitcoin will be a close above 46,000, and then another bullish breakout will be back above 51,000. You can definitely see the Bitcoin bulls are trying to break out, and they're getting very close to getting the bull trend, so we will be a lot more bullish on Bitcoin if it can close back above 46,000. On NVDA stock, we were up 1.33% today, and we still see NVIDIA getting rejected at all of the moving averages, closing below a negatively sloping 20 simple moving average and coming very close to retesting that support level at 236. Below 236, we'll come down to close the gap at 228, and below 228, we're coming down to retest the low at 209. Now the next bullish breakout on NVIDIA stock will be back above the 50 EMA, which is a close back above 261, and then breaking and closing back above our resistance trendline on a close back above 267. So wait to get bullish on NVDA until you can see the confirmation of the bullish price action. Otherwise, expect more downside and more than likely fill this gap at 228 before earnings, which is just right around the corner now. On Tesla stock, we were up 1.83% today, and we did see Tesla breaking down through that support level at 900 and closing the gap at 857. So there's no more gaps on Tesla that need to be filled. So if we break down below 857, you're looking for a retest of support at 827. If Tesla at any point starts closing below 827, you need to be very cautious of a prolonged bear market. Your next bullish breakouts will be back above 900, back above 939, and then back above the 50 EMA, which is at 967. There's no reason to be bullish on Tesla stock while it's in a downtrend, which is confirmed with all the moving averages negatively sloping and all stacked to the bear side. So on a breakdown below 857, the bears are going to raid this stock and try to drive it down below 827. So be very cautious and look out for more downside below. On Apple stock, we were up 0.14% today, and Apple is trading at a very critical support level right around 168 to 169. You can see Apple is starting to lose the bull trend, and if it loses this support level at 168, it could be coming all the way back down to 162 to 157. Now that Apple is losing the bull trend, you got to be a lot more cautious because it is starting to lose some of that momentum, and that's what was making Apple look so bullish. So without that momentum, you need to be very cautious at these levels. The next bullish breakout will be back above 172, and then we could try to make another attempt to break out to regain the bull trend on a close back above 176. Above 176, look for a retest of the previous all-time high at 182, and above 182, you have a brand new all-time high price target at 188. Now, if at any point you lose that support at 168, get a lot more cautious of continuation to the downside. On the financial sector, we were down 1.12% today, and we still have the price action above the 50 EMA, but you can see now that that gap has filled that we're starting to pull back. The industrial sector was down 0.37% today, and it's starting to retest the lows going all the way back to the end of January. We have the full bear trend and the price actions below all the moving averages, so don't get bullish until price action can get back above the 50 EMA. The healthcare sector was down just over 1% today, coming back down to this support level and trading below all the moving averages and developing some bearish trending. Just like on the industrials, don't get bullish on healthcare until the price action could get back over that 50 EMA. The energy sector was down 2.36% today with the price action closing below the 5 EMA, but we still have the strong bull trend and we still have price action trading above 3 of our 4 moving averages. So jumping back over to the S&P 500, you can definitely see this market is starting to see an increase in volatility as we're starting to break through some critical support and possibly going down for another leg lower. Watch that confirmed double top on SPY because it could be possible we're going down to meet that price target. And then we could be looking for the possibility that that will act as support and we could try to bounce from there. Remember, when a market has a lot of volatility and a lot of chop, you want to use great risk management and you want to make sure that you're not getting bear trapped or bull trapped alike because it's going to be a volatile whipsaw with traps in either direction. Know your critical levels and trade accordingly and make sure you're not taking on too much risk in a choppy market. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. With this recent market volatility and a brand new trading year, now is the best time to be a bank member. You can find out all the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.